going on, guys? So this morning I wanted to do a little lesson on the balance sheet. And what we're going to do with the balance sheet is we're going to look at one of the most useful tools, in my opinion, which is the current ratio. Now, I'm not going to be breaking down the current ratio, but I'm going to show you guys how to find the current ratio and really why it's important, okay? So, first off, let's find the company. And for you guys that don't know how I find stocks, I have a screener, right? I have multiple screens that I can use. Um, but this is how I find stocks. It automatically pops up and I have stocks all day, every day. As soon as something starts to move, I can see it. Um, and if you guys are interested in something like this, if you want something like this, uh, we could be working on getting you something similar. I don't know if it'll cost money or not, but maybe for relatively cheap, we can build something for you guys to get stocks all day. So if you're interested in that, let me know in the comments and I can work on that. Okay, but now let's get into the fundamental lesson. Let's look at, no, not that one. Let's look at this one. Let's look at NVCN. I've traded this before. So I'm going to pull up the financial statements on NVCN. All right, I'm gonna get rid of that other screen. Now, balance sheet, right? And for the balance sheet, you guys want to remember a balance sheet is a snapshot, a screenshot basically of the entire company's financial health. The balance sheet is how healthy a business is. This is how you can tell if a business is sick, if a business is healthy, what's going on with the business. Balance sheet. I think it's probably the most important tool that I use. Uh, Financial statement wise, it's my favorite. It's the very first thing I look at, and it's kind of the thing that I spend the most time on. So, right? And since it's a snapshot of the company, you want to find the most recent snapshot. So, you don't want to look at a company's annual report or balance sheet or, the second quarter of 2017. You want to focus on the most recent release of the balance sheet. And then you want to go back if you want to really dig deep into the company. So for NVCN, we're going to look at quarter two, 2018. Now we have the cash position and all of these tabs, right? Prepaid expenses, total inventory, total receivables, accounts receivables, short-term investments, cash. These are all current assets. So anything above the total current asset column is a current asset. So this company, most of their assets are cash. They have a lot of cash as of June 30th and not much else, right? Yep, that's about it. Okay. So we write down this number, 22. So seems pretty good. They have a decent amount of liquidity. And why is the current ratio important? Well, if a company has more assets than current liabilities, current assets over current liabilities, then that means it could pay those liabilities. The assets are, and you have to be careful what the assets are. Cash is cash and nothing else is cash. So if you have a lot of inventory and not a lot of cash and you have a lot of bills to pay and you can't push that product, then, what good is that inventory? Not that good. So you got to look for cash. Cash is by far the most important thing. And even Warren Buffett will say cash is cash. There's not anything that's similar to cash. Cash is the most important thing. Okay, so this is really, really important that they have a lot of cash, and it's good for them. Okay, and now we're going to go to the liabilities portion. Okay, and same thing with current assets, current liabilities. You'll see the total current liabilities. It's a little bit more bold, and anything above that is a current liability. So this company doesn't have many current liabilities, okay? So if you look at their current ratio, they're pretty good. They're doing all right. They will be able to pay their bills. They have a lot of cash. They should be okay. Now, you have to take that with a grain of salt because you need to go into the income statement and see what their cash burn is. Now, I did a video on cash burn, and that's why I did that video first, is because you have to apply it to this. So, go back and watch the cash burn video, and then come here and see, right? So, if they're burning $10 million cash, and their total assets will be minus 10, so it'll be 12. Now 12 over 6, it's still okay. They're still fine, but you know, if their cash burn is say 15 million, now now they might be in trouble. They got 6 million. You know how that works. It's common sense, really. So that's important. That's really, really important. Um, Now, if we take a look outside of the current assets, we'll see that they don't have really any assets other than cash. That's all they got. Uh, and their total liabilities is actually 28 million. And if you have more liabilities than assets, some things can get sticky. Um, let's look at a company like CEI because I know they have an awful balance sheet. Let's get rid of this company. And we're going to add CEI and look at it really, really quick. All right, perfect. So if we look at CEI, right, their current liabilities are 41 million and their current assets are 1.32 million. Now, I think they just did an equity raise, so that means they have a little bit more cash, but at the end of the day, things are going to be ugly for this company, and this is why the company's trading at 20 cents per share. It's very close to going bankrupt. Um, they're not going to be able to really do anything with their business. Their business is likely going to be a zero in the future unless they can really find a way to turn it around, which is very, very difficult. Okay. One more company that I want to show you guys is Tandem. So, why was Tandem so cheap and why did I get such a good price on it when I bought it? Well, let's take a look at the balance sheet. Okay, so Tandem has completely changed and flipped their balance sheet, and this is why it took me so long to buy Tandem. I watched it for years, and for years I couldn't buy it, and finally there was a point in time where I could buy it because of some different things that happened, and I'll go over that in a different video. But look how ugly this is. This got pretty ugly here. You know, total current assets 55 million and oh wait, hold on. Yeah, 55 million and total current liabilities 30 million. Now that doesn't sound that bad, but with Tandem's cash burn, it was getting iffy if they were going to be able to survive or not. And if you look here, you'll see that they had to issue a lot of stock, a lot of they had to raise a lot of cash to stay alive. Um, and that's pounding shareholder value. That's just putting you down and down and down and down and down. But they luckily ended up getting financing. They had a big investment, and now when they got that investment, it literally turned things upside down, right? So they had $114 million in total current assets, and they only had $43 million in current liabilities. So a lot of things changed from, the third quarter of 2017 to the first quarter of 2018, and then you can see how important the balance sheet is, right? Because it gave investors confidence. And, this is, we saw the first quarter 2018 Tandem. What do you know? $2 a share, $50 a share. Now, as the balance sheet improves, as the future looks brighter in Tandem and other companies, the stock price will change. If a company like CEI has no chance to survive, there's a reason why their stock trades at 20 cents a share. It's because they're going to die. They're likely going to die. Now, if CEI ends up, I don't know, getting $100 million and their revenues are growing and maybe they're going to become profitable, then the company will explode. Okay. So It's very important to watch these things, and that's how you use the balance sheet. The balance sheet is the most important thing in finding out how healthy a company is. Okay, so hopefully that lesson helped you guys. If you like this video, definitely give me a thumbs up. If you want to learn more about stocks, balance sheets, income statements, cash flow statements, all kinds of fundamentals, SEC filings, and even some technical analysis, please subscribe to my channel and stay tuned for my other videos. All right, guys, thanks. Hope that helps.